It's January 16th, 2019, and this is Eric Smart Live. Hey guys, I'm Eric Smart. And today we're talking about the cannabis market, some interesting things happening. I think we've got some major players making some big decisions. In particular, one, Tilray, which is traded on the NASDAQ and is one of the larger cannabis companies out of Canada, has made an announcement and a big play into the U.S. hemp-based CBD market. They're deploying quite a bit of cash in the tune of over $100 million in a deal with Authentic Brands. So Authentic Brands has over 50 brands and 4,500 stores in the U.S. and Canada where they sell things like cosmetics. Well, they don't sell cosmetics, but they will, because Tilray is purported to be making CBD-based cosmetics and foot cream. So in particular, 9 West is a brand that Authentic Brands has in their portfolio. And in this case, the CEO of Tilray specifically mentioned that they would be making a foot cream for 9 West. And that's an interesting play, and from a personal standpoint, because my company makes a foot cream. So I think I've got a thing or two to say about that. And I can understand why they're going in that direction. The foot care market is very much dominated by one player, Dr. Scholl's. They really own a lot of the market share. So companies are always looking for ways to compete in that space because it's not very crowded, but it is dominated by Dr. Scholl's. I can also see that that's a natural lead into those types of shoes because, you know what, if you're wearing high-end shoes, especially women, they're going to have a propensity for foot pain. And CBD is an excellent analgesic for different types of pain, in particular inflammation, which if you're wearing a tight-fitting shoe, CBD will help with quite a bit. It's also interesting to see that Tilray, which has traditionally been, up to this point, a cultivator and seller of marijuana, the intoxicant side of the cannabis market, and now they're starting to focus on the therapeutic side. And I don't know how that's going to play out for them. I know they have a lot of cash. They have a very solid balance sheet, and even though they're roughly $60 million in top line, I would say that their valuation's over $7 billion because of the balance sheet and because of the exuberance in the market. So for them to commit over $100 million in cash and stock is not really that big of a play in their scope of things. But in the market in general, it's a pretty big play because the CBD specific market in the U.S. is not that large. I think it's estimated to be a little over $1 billion for 2019. That could change dramatically, though, if national retailers start onboarding these products. Usually there's a lag. National retailers have to do compliance on their suppliers. It's a process, can take 6 months, sometimes over a year. But that's starting to obviously begin, and you're seeing inroads being made. Back to Tilray, though, what's going to happen with those guys? So here's a company that has, to date, been focused very effectively in cultivating and building brands around the intoxicant side of cannabis. How are they going to manage the health care aspect of it? How are they going to deal with that? And in this case, it's a very retailer-specific consumer packaged good. I don't think there's a huge leap in it, but then you start going over to cosmetics, and there is a big difference between that. That customer is going to be very different from, say, someone who just wants pain relief. And that's a challenging aspect. Management's got all new types of problems they have to deal with, both in marketing and in product development. So we're going to see how Tilray deals with it. I'm curious because you don't really hear about cosmetic companies getting into the alcohol business. You don't hear about healthcare companies getting into tobacco in particular. But you're seeing that happen in the reverse, where you're seeing intoxicant-focused companies getting into the healthcare cosmetic side of things. They have a lot of cash, so we've got companies like Tilray and we've got companies like Canopy that are well financed. You've got other companies that have come in and put a tremendous amount of capital on their balance sheet so they can go out and do deals like this. The question is, can they execute? Time will tell. I think from my perspective, I wouldn't necessarily bet on them unless I saw performance. And the problem with that is, as soon as someone comes into the market who's got real expertise in executing in the healthcare or cosmetic space, and they have similar financing, what's going to happen? Because Tilray is going to be looking over here at the cannabis market, where they're operating well to date in the intoxicant side. They're going to also watch the healthcare side. They're going to watch the therapeutic products with as much detail and as much capability. It's a real challenge. Even if you're doing the same thing, running a business is difficult. Running a business in an emerging market that's changing rapidly within weeks and months is incredibly difficult. So it's going to be a fun thing to watch. I don't think anything dramatic is going to happen in 2019 with any of the larger brands right now. When you see the Tilrays and the Cannabis, they're going to continue to make acquisitions, buy access to markets, get better channel development. The big question is, when do the national retailers start onboarding this, and who emerges from that? Then you'll start seeing the real competition for the guys who are sitting on top right now. Because the reality is, those guys are still under $100 million in revenue. And even if they're starting to approach that in 19, they have to get dramatically larger before they have true competitive, sustainable advantages. So we'll see. I'll keep you updated. Check back in. Thanks for joining.